Before we get started, I've got a thank you to give out to each and every one of you who have stuck with me throughout the way because we just hit our 1,000 subscriber mark, and that means the channel will be monetized soon, and this is going to make the entire operation, the entire channel, a lot more sustainable for me moving forward. So you seem pretty convicted on the uranium front. Any other, what would you say is your most convicted sector or sectors at the moment?
I would say right now, uranium. I'm going to say something. This probably require another conversation, but I'll just give you this. I'm very bullish on the rest of the world ex OECD. What do I mean by that? I'm a big believer in this bifurcation that's now happening, this multi-polar framework. I believe that a lot of these countries that are emerging now, I think China, Russia, India, regardless of the politics, I'm not going to get into that. The fact of the matter is that the OECD countries, the US, Europe, Japan, Australia, places like that, the Anglo sphere, if you will, that's what I call it, the Anglo-American sphere, European, it's as a percentage of the world economy, it's being superseded by the other 80% of the world now, population-wise. So I think there's tremendous growth and opportunity around the world. I've traveled extensively around the world, not since COVID, but a lot of the opportunity. I am very bullish on the new Fertile Crescent, Turkey through the Caucasus, the stands, and into,
The Silk Road
southern.
countries.
Yeah, exactly. And there's tremendous opportunity there. I'm very bullish on that long term. They have positive demographics. They have low debt levels. Everything that we don't have, all the problems that we have in the West, they have the exact opposite issues. So they just need more capital. And I've been known as being a big advocate for a country like Uzbekistan and the changes that have happened there. Country of Georgia, I'm very bullish on. So there's tremendous opportunities involved here. But again, for a lot of your listeners that are probably a lot of Americans or Canadians, one thing to think about is to get out of your home country bias. Most people have a home country bias, just like they have a home team bias. And, with the internet the way it is and the ubiquity and relative cheapness of capital, get on a plane and go to these places. I think you'll be amazed. And your ability to deploy capital to these places is greatly enhanced now. It's not as difficult to do that. You don't necessarily have to go open a brokerage account in Tashkent. There's different ways to do things. I mean, if I was 22, I would get on a plane and go to certain countries in Africa. There's just tremendous opportunity in these places, but
the Casey lifestyle.
Basically, I'm telling you, I mean, I'm not going to say that I actually am on a call with some people. He's on there occasionally, so I'm a big fan of his. He's had a big influence on my investing career, my philosophical
likewise
views. So, but that's I'm bullish on that because I think, not to denigrate the West, but the West seems to be, I think you kind of alluded to it earlier, we have rested on our laurels and our success, and the people that were in the rest of the world, I mean, if you travel, you will see people hustling. I mean, I've been all over the world. I mean, everywhere I go, I see people hustling business, trying to get something going, entrepreneurial, working, 80-hour weeks, but they have a smile on their face. They're happy. They're not overweight and tired and worn out. They don't have, their governments realize in many cases, they're competing with the rest of the world. So they have to put policies in place that are positives for economic. That's not everywhere, but you get my point. So I think that
they've got the right attitude.
Exactly. So if you look at for things like that, and I really, like I said, I really like that whole area there. It's totally ignored. Nobody thinks about it. I mean, I'll give you an example, like Uzbekistan. When I first got involved there with a friend of mine who runs a fund there, I mean, the PE ratios were like 1 or 2. You could buy things at, a third of, 0.25 of book value. I mean, they were giving the stuff away. Dividend yields were like 15%. I mean, yes, there's currency risk, there's different risks and stuff, but I think if you look at like the history of like the Tiger Cubs, like Southeast Asia, when they were Vietnam, Thailand, Malaysia, when they went through their, if you put the right policies in place and you have a young, hungry group of people, and the capital comes in and the government makes the right, incentives put in place, the place takes off. So that's what you're seeing in many of these countries now. So I'm very bullish on certain emerging markets, and but uranium, I think, is probably my highest conviction, and then I think the rest of the world, ex OECD countries. For example, today Kazakhstan put its application in to join the BRICS. So
Yeah.
you can see what's
Quakes.
happening. You know what I mean? Yeah, exactly. So it's kind of interesting. I think that has some legs. That doesn't necessarily mean I think it's going to be a better world. I don't know, but like I said, if you go to the ground on some of these places, you'll be shocked. I could tell anecdotal stories about buying things very, very cheap and getting good returns and stuff. But that those are war stories, and it's not most people aren't interested. But so
Another
that
podcast.
yeah, exactly. So that's kind of where I'm at. And like I said, I'm very eclectic. I'm looking to buy things that are inflecting. I'm looking at something right now. Look at the election that's getting ready to happen in Argentina. Look what happened last time when they had a pro-market candidate, what the market did when that guy got elected. And that something similar is probably likely to happen in October. So there's an opportunity there. It's not an investment, but if you have every candidate, you have the previous Kirchner Peronis only have about 22%. They're not going to get reelected. People have had enough. So the other candidates are actually either center right or right libertarians. I mean, the libertarian candidate has 24% of the popularity right now. So if you look at some of the policies, so it's the same thing. You have to get 50%. So the Peronists are going to be out. So you already see, if you look at the charts, at some of the Argentinian stocks that you can even buy in the U.S. Like they're already starting to move in anticipation. So that's an opportunity.
Really
That's the kind of stuff I look for. Something
interesting.
that's crappy, or that's going to go from has a catalyst to go from crappy to less crappy. So that's something I'm interested. I'm actually working on that after I get off this call, looking at all the potential companies and starting to deploy some capital there in anticipation of that. I
Yeah.
mean, I'm looking at look at what's happening. I just read a guy that just was in Venezuela. I mean, it's not actionable, but something's happening there. I got things on my radar like Lebanon. It's a basket case right now. Will it stay like that forever? Maybe, maybe not. I mean, when Cyprus had its deal, I think it was 2011 when they had the bank bail in, the stock market dropped 98%. That was the time to buy. There were Cypriot stocks you could buy that had most of their operations off the island and continued to make
Yeah.
money. And some of those companies, that's what you have to look for, that kind of opportunity.
I can tell you in terms of Lebanon, the real estate market there is actually bouncing back. It has been bouncing back over the last few months. I mean, I actually have family down there, and they're telling me that they're starting to see some pretty expensive homes come on the market in tourism, and because there's a lot of outside capital in a place like Lebanon that comes in, because over half of the or let's just say half of Lebanese on the planet actually live outside of Lebanon. There's more
Exactly.
Lebanese people living outside the borders of Lebanon, but they bring their capital in US dollars into the country. So I mean, to your point there, I think Lebanon is something to look at as well.
I mean, it's not actionable for most people, but that's the kind of stuff
Yeah.
I look for. I mean, everywhere I've been in the world, I'll be in some out of the way place, and I'll meet some Lebanese entrepreneur that somehow has sniffed out an opportunity and created a business, like a mining supply. I mean, I've seen all kinds of wild stuff. So it's very there's always opportunity somewhere. And so I think
Mhm.
just sitting here in the U.S. and writing this thing down like you're reading Gibbon, the decline and fall of the Roman Empire. I
There's
mean,
no obligation. Yeah.
yeah, why I have to stay here and fight? Why not go down a plane? And I mean, I was just another guy I talked to, Ladislaus Maurice. I mean, he just had an article. He flies around the world and does real estate, the wandering investor. You might want to interview him. He's a pretty
Name?
interesting guy. Ladislaus Maurice is his YouTube channel is the Wandering Investor.
Okay.
And I mean, he goes all over the world and sniffs out all these, same kind of things. He's mostly based in real estate. So if people are willing to do some work and they have some capital. I mean, if you got $5,000 in your brokerage account, this is not for you, but there's all these opportunities around the world. And like I said, don't just be wedded to your own country. There's plenty of things going on, and as things get easier and easier to open brokerage accounts or whatever, what have you, it becomes easier to take advantage of these things. So
Yeah, and when you buy these things dirt cheap, they don't even have to rally that much for you to get like 200, 300% gains without the market even noticing. Like
that's exactly right.
Yeah. So, I mean, you could buy something that's been depreciated, 95%. You could see a doubling and the market doesn't even notice it.
So as soon as I see something that blows up, I put it on my, I have this like spreadsheet for like what ifs, or you know what I mean? Like things to keep on my radar to watch. And then I try to look like I said, what's the inflection, or is there a catalyst that makes it go from horrible to less horrible? And to your point, just going from bad to less bad can be several 100% returns. That's exactly right. Argentina is not going to become Singapore, but just the fact that you have the last time that they had a pro-market candidate become president, which was about 10 years ago, the market rallied several 100%. So the same thing could possibly happen now. It's not investment advice. I'm just saying it's just another thing. That's how I think about opportunity. So anyway, that's it.
What about nuclear fusion? That made the headlines for about a month or two and then kind of fizzled out. Is that, where does that kind of paint nuclear fission in light of all of that messaging of nuclear fusion? And is there more to the story? Are we a lot further out in actually adopting nuclear fusion than we're been made out to believe?
Right. So the phenomenon of splitting very heavy atoms was discovered in the 1930s, and by 1956 we had a commercial nuclear reactor selling electricity onto a grid. The concept of fusion, the ability to fuse very light atoms together to basically replicate the conditions of the sun to some degree in terms of extreme heat, extreme pressure. That was done, in the explosion of a hydrogen bomb. And we have been able to recreate that, but we've not gotten anywhere near commercial power generation in terms of the energy in versus the energy out. And, that's approaching 60, 70 years. So you're getting a sense of how easy each of these phenomenon are. And when I say not even close, I mean it. You might have heard of this experiment. It's called inertial confinement. Basically, you're setting off a whole bunch of mini hydrogen bombs using laser for the energy source. And so, 2 megajoules of energy were put in, 3 megajoules of energy came out. The laser that delivered those 2 megajoules required 500 megajoules of energy to fire up. And then, that heat would need to usually be used to boil water, make steam, with efficiency losses of around 60%. The engineering required is highly, highly complex. The fuel is like, people say, well, you're just turning water into energy. It's not water. You're needing to use isotopes of water, like deuterium or tritium. So it's, for me, it's something that's a very interesting science experiment. We learn a lot about particle physics, but this is not a viable form of energy generation, and I think is unlikely really to ever become a viable form of energy generation. Because again, of just the very difference in these challenges. Fission, I think, is very attractive, and fusion doesn't solve any of these so-called intractable problems of nuclear fission. You still get radioactive waste out the back end. There's a lot of neutrons emitted that's it's a slightly different waste stream. There's still a huge tie into nuclear weapons, right? This is the same, the people working on that fusion experiment, it's at a national laboratory, which is mostly funded by nuclear weapons research. So, I think there's a big attraction to fusion because it doesn't really yet exist, and we can pin all of our optimism and hopes to it and not have to deal with the technology that we have demonstrated, and that it has, like any technology, some hiccups. But to try and answer more succinctly, I don't see fusion being disruptive in any way, shape, or form, and certainly not a viable replacement for fossil fuel services on anything like a time scale, of even centuries at this point.
Wow. Any other like emerging technologies that you're really excited about? We talked about fast neutron reactors. We talked about SMRs. What else is on your radar?
Yeah, I mean, so in terms of, reducing carbon emissions, we hear a lot about the need to electrify everything. There's limits to what can be electrified. I think, I've learned to become much more nuanced on the question, not necessarily of the dangers of climate change, but of the kind of Gordian knot that needs to be untied to actually reduce carbon emissions. I don't think that net zero is a possibility even. And if it is, it's a centuries or millennial long project. And that's not because I'm not a fan of trying to move quickly on dealing with climate change. It's the fact that we are a fossil fueled civilization. If the Just Stop Oil or Extinction Rebellion activists had their way and we didn't take another drop of hydrocarbons out of the soil, their fantasies and apocalyptic fears of billions of deaths would manifest, on a decade time scale as the world's soils depleted, and we didn't have the nitrogen required to grow the crops to feed humanity. It's estimated that without synthetic fertilizers, we'd only be able to support a population of 4 billion. So there you have your billions dead in, by 2030 or 2040 or whatever that these folks talk about. This doesn't diminish the need to act on climate change, but the tools that we're using, I think, are generally speaking the wrong ones. Even on the, I've been thinking a lot about and researching around electric vehicles recently. My government calls them zero emissions vehicles, which is just not true. There's a huge amount of embodied emissions. Batteries require a huge amount of mining. It takes tens, maybe even 100,000 kilometers of driving an EV to get to a lower emission profile than an ICE vehicle. This is not a panacea that somehow solves all our problems. So, in terms of, breakthrough technologies that are on the horizon, I mean, I'm excited about deep geothermal. I think there's some potential there. I don't fetishize nuclear technology. I apply a number of I try and address a number of goals and see which technologies match up. Right now, nuclear, I think, has the most promise as a viable replacement for some fossil fuel services. Process heat is another very difficult to decarbonize area. Fossil fuels can get you up to the kind of heat required for a lot of metallurgy and chemical processes. Nuclear has that capability with high temperature gas reactors. And so that's something that I think is emerging. You've heard Dow Chemical is planning on deploying the X Energy high temperature gas reactor to fuel some of their industrial processes. So I think that's something definitely to keep an eye on.
Awesome. Well, I want to be mindful of your time here, Chris. Are there any parting thoughts you want to leave the audience with before we sign off?
I'm going on 3 hours of sleep right now, so I might be drawing a few blanks here. But yeah, I mean, I think people, and your podcast is geared towards probably the investment community. In terms of the investment case for nuclear, I think that's changing quite rapidly. We've seen nuclear inclusive green bonds. We've seen a lot of positive statements from major financial institutions. Obviously, there's the whole phenomenon of uranium speculation, and I think we're seeing a real sea change. There's a lot of reluctance from the financial community, again, because of the perception that nuclear is a very high risk construction project, and those fears are merited when looking at the recent experience in the U.S. and Europe. But I think in terms of what leads to nuclear deployment, we talked about the need for increasing demand, and obviously the other thing is energy security, fuel security. And that's why, if you look around the world where nuclear has been most widely deployed, in the US quite a bit because there was a desire to master this technology. But in a lot of other places, like where I'm talking to you from, no significant natural gas reserves, no coal reserves. We were importing coal, we were sending money abroad for our energy needs. And we decided, we have a lot of engineering experience. We have a very developed nuclear research sector. Let's gamble on this and see what we can do. Can we have our own source of energy that's secure? And we've done that. That's a big reason why Japan used to be 30% nuclear powered. They burned through their coal during their industrialization. You can import tiny amounts of uranium and store years worth of that fuel on site, and it makes you, fairly immune to energy shocks like we're seeing right now. So hence the real kind of return to nuclear. And I look forward to seeing sort of where that goes and how the financial community, interacts with this new enthusiasm towards nuclear.
Yeah, we're it's totally changed over the last couple of years. We've seen a huge shift in investor mindset into nuclear power, and just the community on Twitter, on Reddit, and so forth. You're starting to see a lot of the younger generation come in and really move forward with this kind of thesis. All right, guys, now let's pivot over to our machine learning models really quick. For the week, we've got our URNM price versus its specific fear and greed index. We've got the red line here outlining whether there's fear or greed in the market. The higher it goes up, it means that there's more greed. The lower it goes, it means that there's more fear. And we've got the URNM price here in blue. And as you can clearly tell, anytime we've got extreme greed in the market, like we had here, we saw a drawdown in the blue line, which is the URNM price. We had it here, boom, drawdown. Here, boom, drawdown. And now we're back up here. If what the technical analysis is telling us, which is more upside to come, given all the bullish engulfings and the hammer patterns and all this stuff, it could be a case with along the lines of what we had here, where we saw extreme greed, but yet we kept pushing forward nonetheless. Now, we did see a bit of a drawdown into fear territory, but not much. We saw extreme greed here, which led to a little bit of a drawdown here. We saw extreme greed here, which saw a little bit of a correction here. So we'll see. But the uranium price has moved up fast. It moved up a lot in a short amount of time, which is what elicits this fear and greed index to move up to greed territory. Let's look at our prediction model. Let's zoom out a little bit here. Okay. So to kind of recap, the blue line is your actual uranium spot price, proxied by SPUT. And then you've got your red line here, which is your predicted model price. Now, the red line is essentially what the model thinks is fair value. And as you can see here, anytime we deviate significantly away from the predicted value, the red line, then we see a strong correction back down where we overshoot. And then vice versa on the upside. So we saw this here all the way back in 2007. We peaked all the way up here versus the actual fair value price, and then we corrected to the downside thereafter. We saw the polar opposite here in 2020 and 2021, where the predicted value was substantially higher than the actual value of uranium. And then we saw a huge correction to the top side. Currently, we were at undervalued territory for a number of weeks, but now we've pretty much reached parity with the model. So the price of uranium is looking like it's at fair value at the moment. This one's interesting. We always look at. So we've got a low resolution view of the trend of uranium on a year-to-year basis. We can clearly see we were in a downtrend here all the way up until 2020. Then we broke out of it in the last 2 years. So we're clearly in a bull market. And then we've got the seasonality during the time of year. Typically, the uranium tends to consolidate downward, or we tend to have more headwinds during the months of March all the way out into July. But once we kind of break out of July, uranium has a lot less of that headwind to contend with. But nonetheless, even during these months that we see here, we're still moving on up. So this is a testament of this uranium price action. We've moved up quite a bit since April, which is all the way out here. So we should be going down a little bit. And then this is interesting. So this is looking at the individual regressors of the model. So we not only use the uranium price to model out uranium, but we also use the oil price to take into account input costs. We took into account the gold price and to account for rotation of capital into gold. And then we also took into account the DXY as well to measure the dollar strength index against uranium. When you take into account all three of those variables, anything above a 0 indicates that those three variables at that time were a tailwind. Essentially, they were moving. It means that the prices of each three of those individual components were moving the uranium price up. When anytime it moves below 0, that means that they were a detriment. So it could be, like an extremely high DXY or a low gold price or something to that effect. Where are we at today? Well, it looks like we're pretty much a little above parity. So the oil price, the macro environment when it comes to oil, gold, the DXY doesn't really seem to be having much impact. Now, notice how 2020 all the way up until early 2022, those three components were a tailwind for the uranium price. So, they were a large part. We were in an inflationary environment. You could still say we still are, but we've come down quite a bit. So that tailwind is gone. We're about in neutral territory at the moment. All right, let's check out the news on SPUT. Let's see where SPUT's at currently. A minus 8.61% discount. So you can buy uranium through SPUT, the Sprott Physical Uranium Trust, at a negative 8% discount. And why is that? Well, let's take a look at this chart. So the yellow line here is the NAV, the net asset value of all of their uranium holdings. And the green line here is what the vehicle is selling for. And anytime this green line is below this yellow line, that means that you're essentially getting a discount to all the uranium that SPUT holds. And we've been in discount territory for quite some time, as you can see here. And when SPUT's at a discount, they don't buy uranium off the market. So all this spot price action that we've been seeing has not been elicited by SPUT like it was in July all the way out until March of 2022. Okay? So there's something else happening in the market. It's not just SPUT vehicle just pulling pounds out. Let's look at sentiment. Uranium stock sentiment over time. We're still in the dirt, guys. We had this big peak in uranium stock Google searches. This was around September or so. This is indexed at 100. If that's indexed at 100, we're currently at 3. So uranium sentiment, let me move this a little bit down. So uranium sentiment is about 3% of what it was at the peak of September of 2021, which was the high point. Let's move on over to Twitter. We've got John Quakes here with some news for us. So he says, after a long hiatus, uranium stocks are back on the radar for Larry McDonald and his 650 plus institutional subscribers to the Bear Traps report. So what does he say? He says we would be aggressively adding to all uranium longs here as CCJ breaks out. So we've got this highlighted section here. CCJ, one of our highest conviction longs since 2020. We're long a third, looking to add a complete, a long 3 out of 3 URNM ETF. So they're looking to complete their uranium position sizing with adding URNM to their portfolio. What else does he have to say here? Let's see. All right. Technical difficulties. Got it. All right. That was weird. So the conclusion he says here, we would be aggressively adding to all of our uranium longs, but our favorite play, as our readers are well aware, is low-cost juggernaut Cameco. Oh, and from our recent discussions, we believe there are a number of traders in these names that are very much so offsides i.e. short, underweight uranium equities. So could we start seeing a short squeeze? Is that what he's alluding to? So many people, so many traders have shorted this thing, and there's not, I mean, they've pretty much used up their load. You know, there's not much more downside to come. We'll see where it goes. So we could be seeing a short squeeze in uranium, and that seems like what he's alluding to. What else do we got here? So he said we would highlight the stability and upward trend of the physical price, while equities are perhaps the most dislocated from fundamentals in 5 years. Yeah, no, shit, Sherlock. Trying not to anger the YouTube gods there, but 5 years of so more dislocated from the fundamentals in 5+ years. So URNM, URNJ, all these uranium equities that we're saying are dirt cheap versus the actual metal. Let me take you back here for a quick second, actually. Let's look at URNM versus the uranium spot price. Now, we did have a little bit of a move up here. But let's take a more zoomed out look. So we're still all the way down here, y'all. I mean, if we have to retrace back to these highs here, this would take us to a 96.22% increase. Okay? Come all the way from here to here. So, a lot of upside when it comes to the equities.